Well, all right. After a week off, y'all, we have returned to give you all a market update, see how the markets have been reacting, see what interest rates are doing, see where they might be headed. And we do have quite a bit of news, y'all. We received quite a bit of data both yesterday and today, and we're going to get into it. So let's start with the national averages. Don't like this first number, the national average for a 30-year fixed rate conforming loan, according to Mortgage News Daily, 6.66%. We'd like to see that move a tenth or so either direction. 1 week ago, we were at 6.58. 30 days ago, we were at 6.49 in that same national survey. So y'all, as I've said many times, these are not our rates. This is just the national average for a 30-year fixed rate conforming loan. So if you want to see current pricing for Texas, which frankly is quite a bit better than these national rates, call me and I'll be happy to look at a scenario for you. The CME FedWatch tool, y'all, this is the gauge of Fed futures on where the markets think a Fed hike will be coming or a Fed cut. It has been not friendly to the future, y'all, as far as where the Fed might be headed. There is a 52% chance of a hike by the 10/28 meeting of the Fed. Let's see how that changes based on some news that we got today. But first, let's look at what moved the markets a little bit in the wrong direction heading into today's trading. Producer price index came out today. The headline, 6.5%. You know, we're not used to seeing numbers in the sixes, y'all, on that. We've been seeing them in the fives, but the consensus was 6.4%. So on the headline number, we were a little bit stronger than expected, and we're replacing a number that was significantly lower. Markets didn't like that, y'all. But when you pull out food and energy, PPI was only up 4.9% on an annualized basis versus 5.4% was the consensus of economists out there. So we were expecting a number about a half point hotter than the one we got. So that's good news, and that took some of that put some moderation into the trade in the bond market. And then we look at CPI, Consumer Price Index, came out yesterday. Headline number, 4.2% year over year. That was exactly in line with consensus estimates of 4.2%. Ex food and energy, y'all, we're at 2.9% for the Consumer Price Index, and that was also in line with the consensus of 2.9. So inflation is reflecting higher energy costs, y'all. That is the bottom line. When you pull out those higher energy costs, we get a much more manageable number on the inflation front. So how will the Fed view that? Well, it depends on whether we get a deal in Iran or not. And again, we've seen this announcement a lot, but we had started a new offensive in Iran that has now been put on hold just in the last hour with an announcement that a deal may be imminent and fighting has been paused to let that process play out. Now, y'all, going to be quick to point out, we've had at least a dozen occasions over the last few months where that statement has been made that we are close to a deal and we're going to pause fighting, and we have yet to see a deal come forth. The markets are reacting very strongly right now. We're seeing a nice rally in the bond market, y'all. One sufficient for us to actually reprice today and see lower pricing before the end of the day if this rally in the bond market continues. So I'm sure some lenders are already in a position to reprice for the better. We may shortly as well. I'm sure we do have a number of investors that are in the process of doing that now. Here's the thing, y'all. Let's pray for peace. Let's pray for this conflict to be resolved. Let's pray to get some normalcy back into our marketplace, because these outside forces, these geopolitical forces, are just wreaking havoc on our ability to read anything into economic data and to make plans for the future. So many of us live and die by where the market goes, because it is our referral base. We have so many folks that may be sitting on the fence waiting for pricing to improve due to artificial forces that are just frankly not related directly to where the market should naturally go. So let's pray for a resolution to this conflict so that we can get some normalcy and predictability back into the market. Looking very much forward to that. And of course, we want lives to be saved. So let's pray for peace for that reason first and foremost. In any event, may see better pricing shortly, may see better pricing tomorrow. If we see something significant happen, y'all, I might dive in and do a off-cycle video. But until then, stay blessed, stay safe, and we'll talk to you next week.